On today's hot sheet, I'm discussing housing inventory, existing home sales, and the U.S. hottest housing market. Today is Monday, February 26, 2024. I am Byron Lazine, and the hot sheet starts now. Welcome back to the hot sheet, your only 24-hour look back on the internet of the housing market each and every day, Monday through Thursday, if the markets are open. I am sitting here in Orlando, Florida, hotel room. Got Bobby here to my right. We're here for the next 2 days at the Tom Ferry Elite Retreat. So if you're here, hope to see some of you guys walking around. If you're not here, let me know in the live chat which market you are tuning in from. And as we do every single Monday to kick off the week, let's jump into some Altos research and take a look at housing inventory as well as price cuts and new listing data. I will tell you, I am excited about what we see here on total national inventory. Inventory for the last week went actually up at a time of year where it typically will go down. 494,000 to 497,000, almost 498,000. That's impressive. That's a rarity. Last year, the same week, it went down from 437,000 plus to 430,000 plus. We're not anywhere near where we were in 2019, of course, when we were sitting at 816,000. 2019, to me, would be considered a very normal, strong market, still a seller's market, certainly, in 2019. But inventory levels that were much more normal than we're experiencing today. But we're increasing at a time when affordability is crunched, and that will be a welcome sign to many buyers. I can tell you personally, I just put a home on the market, one of my personal homes in Naples on the market, and inventory is up. It's up more than it's been at any point since 2020. And that may be the case for you in your market. There are obviously other markets, and we're going to get into the hottest U.S. housing market, which is not experiencing those levels of inventory. The Northeast areas in the Midwest are not experiencing inventory levels rising. But when we look at the national picture, inventory in the beginning of the spring is going up. That's going to be helpful for a lot of buyers. It's going to be helpful for the inventory as well. Again, 2019, 818,000. So we have a long way to go, but you see the flattening of the curve here. When last year we continued to go down, bottoming out in April at 406,000. And we'll see what happens here over the next couple months going into the spring. But even if we stay flat on existing inventory, that's going to be helpful to a lot of buyers in their searches right now. Let's take a look at new listing data. This is what's driving a lot of this inventory as well. Much healthier landscape on new listing data. For the last week, we had 51,381. And when we compare that to the last 2 years, it's much greater than either of the two. 44,000, 49,000 last year, and 45,000. So 44,900 last year, and then 49,000 for 22. When we look at the chart, the dark red line is this year, and again, sitting above the data marks for same week last year. Now we get a big pop going into the next couple of weeks. Next week is about 50,000 last year. So as long as we stick where we're at, we'll be just above that. But then we start to see into March, some of those more dramatic pops. March 11th week last year, or I'm sorry, this is 2022. We see 60,000. Now we'd love to be above 2022 levels. That for new listing data, that would really help affordability and buyers get some more new inventory. Hopefully, some inventory that's relatable to where the average price points are in their market. For those markets that are accumulating inventory, like the one I just gave you an example in Naples, you may start seeing price cut. I had a nosy neighbor DM my wife because she posted it to the community Facebook page. Hey, here's a new listing, whatever. And in the community, and one of the nosy neighbors who also has her home on the market says, "Why are you pricing it so low?" Well, if you think, I said right back to her, if she thinks it's such a great deal, it's such a steal, make us a full price offer, and she'll get herself, instant equity. But we're pricing it according to today's market. And this is a conversation I'm sure many of you are having with sellers right now. Hey, the market today, if you're in a market where inventory is going up, like the one I just mentioned, then you're going to have a different price if you want to be the first to sell in a particular community or a particular neighborhood, right? I want to be the first to sell. I don't want to sit on the market 2 or 3 months. If you have a seller that has those same ambitions to move a property quickly, then you need to price according to today. And for those like the nosy neighbor who DM'd my wife on Facebook that are on the market and have been on the market, they might start dropping their price if they're serious about selling, which means that we would expect this number to go up. 30.4% in the last week have reduced their price. Now, last year, this number was higher, 31.1%. 2022, of course, it was historically low at 18.3%. Logan Motoshami on a recent Knowledge Brokers podcast, you can go and check that out over at Knowledge Brokers podcast, separate YouTube channel, says about a third of homes typically will reduce price. So we're still under that level. Okay. So still very strong market for sellers. Most people don't want to move off their price right now, even in these markets where we are experiencing an inventory upward trend. Now, it's nothing like 2019, and this is probably why we're not seeing price cuts exceed a third of the market, and it's still very much a strong seller's market. Okay, as we look at mortgages quickly, still the same level remains. Logan's reporting from Housing Wire that anything above 4.34 on the 10-year yield would be worrisome. That when we broke that level last year, we kind of just accelerated up to 5%. We're not at 4.34. We're close, but we're not there on the 10-year. When we hit up to 5% on the 10-year last year, we were at 8%. Now, anything below 3.8 would be really good for the 30-year fixed. There's not a lot of expectation that we get there unless we get unemployment going up or a softening of the economy. Neither of those two have yet to happen, and so we're hanging on the high side of that range of 3.8 to 4.34. We'll take a look at that a little bit later in the show. But first, let's go into NAR existing home sales. They rose 3.1% in January. That's great news. That equals a 4 million existing home sale adjusted annual rate of 4 million sales. Remember, in quarter four last year, we were down below 4 million home sales. 4 million home sales is like the bottom. That's typically what we always see for existing home sales. And we know that, hey, new development is out there. New home starts are out there. Before the real estate agent community, existing home sales is where a lot of the opportunity sits. 4 million being the bottom. We go back 25 years. That's the low level, 4 million home sales. So we're sitting at a low level of volume of turnover in terms of existing home sales. But we're back up at 4, where we were just recently under 4. Going back to, Logan Motoshami, who I just mentioned from Housing Wire, he says that you really typically don't go under 4. So we're at the bottom of activity, and we would love to see this number continue to go up. January is a welcome sign to that, where we had a 3.1% increase to get back up to that 4-point level. We're down 1.7% from the prior year on existing home sales. Of course, we'll have some of these slides and some of this data in the show notes for you inside of BAMX today. You can see going all the way back, obviously to 2020, we're going to be at a low point. But even if you map this out 25 years back on existing home sales, you would see that just after the great financial crisis, this would be the lowest level since then. And we'll hopefully get back into the 5 million level in the next couple of years. Median price of existing home sales, according to NAR, came in at $379,100. We would expect that number to peak back out closer to 4 as we end the spring, just as it has. And this is that seasonality mark, down market, up market, that I always talk about, where you see the high numbers. 2021, or above that number, 366.9. Then dropping down to 354, then up to 413, then down to 360, then to 410, then to 380. You can kind of look at every market almost in America, and it follows the same trend. Winter, you have a lower price. End of summer, you have a higher price, because in the spring, those prices get pushed up and they're reflective by this beginning of the summer, rather, a higher price point, call it June or July, on that max level pricing. All right. Existing home sales median price up 5.1% year over year, according to NAR, as we end out January. That's in line with almost all of the other models that we've looked at. Total existing home sales percent change year over year, down 1.7%, but an improvement from years prior, when we were down 5.8%, down 6.7%, and so on. Those are months. So the month of January, I'm sorry, when we go year over year, only down 1.7%, way better than any other month when we go year over year measurement. So we're starting to improve on total existing home sales. Realtor Confidence Index, first time home buyers, a percent of sales would be 31% in January 2023. Today, 28% are first-time home buyers. Cash sales coming in at 32% of the market. My chart's up. I've been just making sure. Yep. Okay, good. 32% of the market is cash sales right now. Last year was only 29%. So that 3% moving from first-time home buyers over to cash. Sales to investors relatively flat, from 16% up to 17%. Distressed sales up 1% from 1% to 2%. Days on market up from 33% to 33 days rather to 36 days on market. So a tick up there. Of course, very strong for sellers, all those numbers. Existing home sales by region, the South making up 46%, Midwest 24%, the West 18%, and the Northeast 12%, where inventory is, of course, the lowest. Sales by price range, 44% falling in between the 250 to 500 category. 500 to 750 makes up 17%. 750 to $1 million makes up 6%. You have 22% of existing home sales from 100 to 250. And then 0 to 100 is obviously a small number, and 1 million plus is a small number as well. Percent change in sales from a year ago by price range. You had a 27.1% increase from $1 million up. Incredible percent change in sales from a year ago. 27+% million up. 22% change on 750 to $1 million. And then 11% change from 500 to 750. So those bigger price categories where buyers can still afford this market, and speaks to the 32% cash as well, are seeing the biggest increases on sales from a year earlier. Now, let's take a look at what Housing Wire is reporting as the hottest housing market in the U.S. Lisa Chinati, my friend from Boston, would be pleased to see that it is Boston, Cambridge, and Quincy, coming in at 60.59 on the Market Action Index. 60.59 would reflect not only a seller's market, but a significantly strong seller's market. Anything over 30 on this index would be a seller's market. Almost everywhere in the country can still consider themselves a seller's market. I mean, NAR just reported off of that last segment, 3 months of supply right now. 6 months of supply is an even market. Anything over 6 months of supply would be a buyer's market. So buyers in, really little control in a lot of markets. Certainly these inventory starved markets, buyers are in even less of control, less of a negotiation standpoint. Boston would be the epitome of that here at 60.59 on the index, the hottest market, according to Altos Research and Housing Wire. San Francisco, the second hottest housing market in the country, followed by Providence, Rhode Island. Then Seattle coming in at 4, San Diego coming in at 5, Baltimore at 6, Columbus, Ohio, then Sacramento, Richmond, Virginia, and Milwaukee coming in at 48.81 to finish out the top 10. Just to speak to that inventory level, which is driving this market being so hot, the greater Boston area inventory continues to plummet since 2020, almost at its low level of 22 on inventory. This is reflective of a lot of Massachusetts, a lot of the Northeast. They go into speaking about New Hampshire as a state only has 985 active single family listings as of mid February, compared to 3,872 listings just prior to the pandemic. Okay, so New Hampshire, as a example of active listings, has just fallen off the face of the earth. There, 985 active listings in a state that is pretty large landscape. Let's just take a look. New Hampshire. Let me take a look. New Hampshire population. Let's see what it is. New Hampshire population coming in at 1.4 million. So 985 homes on the market for 1.4 million folks. That is just, I mean, come on. And then some of those are going to be like ski homes. It's like, okay, what are you going to do with a ski home? Those are second homes or Airbnbs. It's just, that is just crazy numbers there in New Hampshire. Of course, to get all of our show notes, access to our show notes, each and every single show, just jump into BAMX and you get access to all of this data. I've seen a few of you already here at the hotel here for the Tom Ferry Elite Retreat saying, hey, thank you for those show notes. Appreciate those show notes so much. I'm using those in my email follow-up, in my text follow-up. Get the most out of everything that we do at BAM by joining BAMX, including the show notes and the daily downloads from the show each and every single day. You can use code HOT to get the lowest price today on BAMX. All right, let's take a look at the 10-year. Again, we're sitting around that 4.25 level that we've been at, 4.257 here. We're kind of sitting at the high peak for the one-day range, now at 4.262. So setting a high as we sit here for the 10-year. This will reflect in probably, the 30-year fix staying up over 7%. Finished the week last week at 7.08. We had our highest read all year on the 30-year fixed weekly, coming in at 6.90. Also,
saying that these show notes help him create leads with videos.
Brock getting some leads on the show notes. So obviously get those in BAMX. Also inside of BAMX, we have a new course on March 1st, all about how to use Chat GPT for video. Okay, so if you're using Chat GPT on maybe listing descriptions or other parts of your business, you can get a course on that, on how to use it for video. We upload new courses each and every single month into BAMX. March 1st would be this Friday, so that's the new course release, as always, on the 1st of every month. All right, hope you enjoyed this hot sheet. Again, if you're in Orlando, definitely make sure that you say hello. Expect some new interviews coming here on the main channel this week, and in the following weeks, got some pods lined up for this afternoon. So make sure you're subscribed, hit the notification bell here on the channel. Hope everybody has a great day. We'll be back with you tomorrow, 9:30 on the East, 6:30 on the West. You know the deal in between. And until then, of course, toodaloo.